then sure, if I want to take more cash out, I can get my 28 to 30% cash on cash my first year, my second year. I can do that. I can get high cash, but I'd rather keep more of the money in the property and then sell later on for a bigger payday. That's how I get my 40. That's another element of how I get my.
What's going on, Real Deals podcast listeners? I'm at you with show 395. So 1 week basically until Christmas, 17th right now. My son's getting pretty excited. I don't know about you guys, but and if you have kids out there, I'm sure they're getting excited as well. So just going to hop on to a quick intro here before today's show. I think you're really going to like it. I've been really interested a lot in commercial and just understanding real estate more as a whole. I think one of the key things in any industry is, and I talk about this a lot, is studying it and knowing your product, right? We've talked before about understanding your zoning codes really well in your city, understanding like the value lines. Tucker talks about that quite a bit before, and just understanding this industry as a whole, because certain things make other certain things happen in this. So anyway, so we have Sterling Griffin on the show today, and he is a former guy that was living in his car, started making a ton of money in the health industry, sold his company that was a fitness company, like a fitness coaching company last year, made some good money doing that, and then started buying some commercial assets. And now he is buying more commercial stuff and kind of talking about it a little bit. So he's got some pretty cool strategies. He's earning 40+% return on his commercial stuff. And really he's geared towards high income earners or people that are like, that he's selling these things to or getting in these deals. But he opens up a really good thought process for anybody that you don't even have to have a ton of money to get these deals done. And it's just learning, again, a new asset class, same as we're diving into the multifamily stuff. And it's just a very interesting concept. And I think he's got a great story with him. So anyway, what's going on with us this week? So we just got our 32 unit all painted. They're finishing the doors for the exterior today, and it looks really, really cool. That's the one cool things about partnering with our partner Greg on this, is he has an in-house design team and full-time designer on his staff. So she's doing helping with a lot of the designs. And so very, very excited about that. Still trying to get this other deal signed up. I think we're going to be pretty close, and then we'll figure that out. We've been working on pitch decks and working a lot on the call center too. So I'm going to talk a little bit more about the call center right now. One of the things that we have found in this call center is it provides a lot of leads for people. It does a really good job, but it does get a little expensive. Just you got to buy data, you got to pay for the callers. The callers were kind of expensive. And, the leads that come in are not all wholesale leads. You have to have a good follow-up plan in place to work these. There's retail leads, there's wholesale leads, but they're so different than the direct mail approach where somebody's calling you and saying, hey, I want to sell my house, either wholesale, retail, or take me off the list. The cold call leads is you're getting to them before they've made a decision. So you have to have a good follow-up plan in place. However, you're still going to get 2, 3, 10 leads a day for that lead source. So we wanted to try to make it more affordable for people. So we worked really hard with our centers over in Egypt and the Philippines, and have got our pricing down exponentially. So before we were charging people roughly $1,800 a month per caller. We are now going to be offering it $1,250 a month per caller, which is you're going to get the same quality of calling that we've done before. We're not sacrificing quality, because that's really what we've been known for, is having good quality cold callers, because we vet them really, really well. Everybody's in office. We have team leads. We have quality assurance behind the pods of each pod of 10. They're vetting the leads before they get sent out. And so, but now we're going to be $1,250 a month per cold caller. There's no more scale if you're going to do multiple callers. It's just going to be $1,250 a month per caller. And then our data, we're going to lower our data pricing down to 9 cents as well across the board. We will still give a little bit of a tiered pricing if you're doing big data orders. We'll get cheaper than that. But we still have the same great data that we've tested for the years. And we're just going to undercut the market right there and just try to really push this in more of a volume play. So Really excited about that. We haven't even told our clients yet that we're doing this. We just made the decision last night. So you guys are the first ones to hear about it this week. So if you're interested in learning more about that and working with our call center, you can reach out to Spencer at Call Magic Leads or myself, Elliot, at Call Magic Leads as well. But Spencer will be a better choice for you. So, all right, that's what I got this week, guys. I am going to go off and finish some work before I head into the weekend. Hope you guys have a great weekend, and I'll talk to you soon. All right, what's going on, Real Dealz podcast listeners? Welcome to the episode today. We got Sterling Griffin here. He is a fellow member of GoBundance. I met him this summer. We hung out quite a bit. Almost got kicked off the plane that plane that I almost missed a flight because I didn't book my ticket, and then almost got kicked off on the way to Denver. So what's going on, Sterling?
Oh, man, super happy to be here. And, there is a thing about flying on airplanes, Elliot, is that you do have to buy a ticket in order to get on the airplane. Yeah.
Yeah, was it on that trip? I booked all my own flights. 2 out of 5 flights, I didn't even book the ticket for the right day. Like they were literally, I booked them. They were just for the next week.
Dude, every entrepreneur, we've all done this shit. Like we all lose the details of this stuff sometimes. So anyway, that's why we have people that help us.
Yep, exactly. So awesome, man. So a lot has changed since we hung out in August. You were kind of trying to fly under the radar a little quieter back then. And then you had a talk with Micah Ayla, who's been on the show, and he kind of changed your thought process a little bit on what you're doing, talking about it, things like that. So why don't you dive into who you are, and then we'll dive into what that conversation was like.
Yeah, and in fact, I was just on Mike Ayala's show yesterday. So Depending on when this is released, people, if you listen to his show, you'll see me there too. But yeah, a little bit about me. My name's Sterling. About 6 years ago, I was homeless, living in my Honda Accord in Los Angeles. And I had no business experience. I obviously had no money. I had nowhere to live at that time. And that had come out of a really traumatic time where I had made plans to be a person in ministry for the rest of my life. But there was this process. I think a lot of people in their 20s go through a process where they kind of unravel what they thought they were going to be, and then they decide on a new version they do want to be. And for me, I just took that really hard, and I just couldn't keep a job. I couldn't seem to find a consistent income source. So I ended up in my car. And out of that, I realized that I wanted to become not in ministry, but I wanted to become an entrepreneur. And specifically, the first thing that I wanted to do is I wanted to help people by helping them transform their bodies. So I met a guy who was an online trainer, an online fitness coach. And this guy was 19 years old, scrawny, okay? Yeah. And he was making $4,000 to $6,000 a month, which to me at the time might as well have been $1 million a month. I mean, I couldn't believe it. And he's working like 15 hours a week from his laptop. And when I saw this, I was like, holy shit, you can make money from nothing. This is crazy. And you can make money not just from nothing, but helping people with a service, with what you know. So that led to this process of me being like, I was in shape at the time. I was in better shape than this guy, okay? Yeah. So I'm like, I can help people do the same thing. So I transitioned to becoming a trainer. Over that next year, I started growing, and after about 5 months of trying to throw crap at the wall, see what stuck, I ended up not being homeless. I started making enough money to no longer be homeless. But there's a really interesting part of my story, and this is why I say that having mentors, having people that are leading you, that are supporting you, that have been where you want to go, need to help guide you. My first business mentor, I used $2,500 to pay him for the first month. I took debt out, maxed out credit cards, and borrowed money from my dad to do that. I made enough money to pay him for his first payment after about 15 days. But then I didn't have enough to pay the second $2,500 payment for the second 2 months of working with him. And so I had a choice to make. Am I going to keep working with this business mentor, or am I going to try and figure it out on my own? Am I going to do it by myself or with help? And I ended up selling my car in order to make that second payment. Now, mind you, I was 1 month out of living in my car at this time, at this moment in time. And so this was a huge decision. I took away my security blanket and was like, no, I'm going all in on being an entrepreneur, on making this work no matter what. Well, the next month I tripled my income and went from making $4,000 to $12,000 a month. The next 6 months I made $100,000. Then I doubled income again. That first year as a trainer, I made $286,000. Yeah, $298,000. Sorry. The next year, people started asking me, hey, how can I build my business like you? Like, I'm not homeless, but I'm struggling. Can you teach me how to make how to make some online training income. I transitioned to doing both training and online business consulting for others. I made $1.68 million the next year doing that. I continued growing that business, putting leaders in place, getting people to run the business for me, 2 million, 2.5 million, 3 million, and sold it last year at the end of 2020. Before I decided, you know what? I'm tired of the active income game. I'm ready to get into the passive income game. And then I'll always make money the rest of my life. I'll always have businesses, but I want to have money that's always there, that's always taking care of me, so that the fear of going back to being homeless is completely removed. And I have confidence in myself. So that's led to my journey this year, which I'm sure we'll get into in a bit.
Nice. Awesome. So what'd you sell the business for?
I sold it for, the valuation was at the low end, 4 million, but it could expand based on performance of the acquiring business to be as much as 7.
Okay. So was it just like you had contracts in place with clients, but weren't you the guy you were after, or did you have coaches underneath you?
Yeah, good question. So the final year, a big focus of me that year was getting out of the day-to-day of the business. I mean, yes, my face was at the front of the marketing, but when it came to the operations of the business, I really wasn't doing much at all. I was working 5 hours a week for the final 6 months of owning the business, and that was just meeting with the leaders, making sure that they knew what to focus on. So I had coaches that were running the trainings. I had salespeople doing all the sales calls. I had people making the marketing content, didn't need me to do anything to do that. So it was all running seamlessly, and when it sold, those operations just continued on. I mean, I wouldn't have got it acquired for as much as I did if I was still so involved.
Yeah, totally. So, but that seems kind of passive. Why did you want to sell it? Because that, I mean, 5 hours a week.
Good question.
Very, very. I mean, because like when I go by, like we've been buying apartment complexes, right? We just closed on another one last week or 2 weeks ago. People think they're passive, but they're really not, right? They're very active. My wife wants to kill me right now because she's like, I was fine and done two complexes ago, and now here you are, I'm working, because she's the one that has to do all the operations. So now some buildings are better than others, but they're still not 100% passive. Like I think what you'll talk about today is very more passive, triple net commercial leases, but 5 hours, that's not terrible.
Well, the thing is it was 5 hours for those 6 months, but as long as I was the CEO and primary owner, it always lingered in the back of my mind that I'm responsible if something goes wrong. Gotcha. Like I'm the innovation engine. Whoever the owner is the innovation engine. There's always going to be like, I have to innovate to stay relevant, to keep my income at least where it is, if not grow. Yeah. And so that being in my mind, I was honestly bored with the space too. I was bored with doing the same coaching, the same conversations with trainers and gym owners and all of that. And I was just ready to move on to a different challenge. I mean, Elliot, in our conversations hanging out, I feel that you and I are very much alike. I mean, you're a visionary. You're a visionary. You're a guy that's never going to be content with even the current set of businesses you have. Like if we talk in 20 years, you'll have started 10 more businesses.
I know that's the problem though, because so my wife and I just did these new this different personality test. It's called Culture Index, and it's very I really thought it was spot on. I'm what they call a rainmaker. I'm the guy that drives 80% of the revenue for a business, right? But I'm not the CEO. I shouldn't manage anybody. Nobody should be managed by me. And my wife, it was called a specialist, is what they called. So one of the traits mine is I'm like the top 0.01% of I don't want to play in the rule book. I don't want to play inside the box. No rules don't matter to me. I'm outside the rules. She's in the top 0.01% of needs to stay inside of a box, have rules, all these things. Wow. So the girl that works for my buddy Pat Flynn that you met at GoBundance, I think he's owns a big real estate he owns a real estate investment in Florida, in Jacksonville. She's like goes to him and says, how are these two people married? Like there's opposite and then there's like, oh my God, opposite, right? Like so it's just funny. But she shouldn't manage people either, is what her thing says. Likes to, we're both really, really good at what we're really good at. And
well, dude, anyway. Someone like your wife, I mean, just from your description there, she's an operations maven.
Yeah, exactly. That's exactly what she is. She builds the systems and the boxes that people need to work inside of, right? That's what she is very, very good at. So, but like my buddy Greg that we're partners with, who is a CEO type of person, he was telling me yesterday that there's people, when he was working in corporate America, they basically had two paths: people that can manage people and people that cannot. And neither one, they both have good growth paths, but they're just different, right? And you put them in those buckets. And so.
Well, that's why when I started getting into investments, specifically in real estate, I was super motivated to have the most passive version. because I know another guy, Matt Aitchison. Okay, he's a GoAbundance guy, great podcast, and I'm booked on his show for later this month. But he was talking to me about his love for hotels, like building, developing, operating hotels. And hotels are very operational intense. Like it requires very hands-on operators to build it. And it can make a lot of money, but you're going to work for that. And when he was describing it, I was like, God, I could never do hotels. Like I would never want that. So all my investments are 100% passive as a result. I want high returns like you can get from active income, but I also want it to come without getting calls about, well, we had a tenant pop out, what do we do? Or we had this thing break, or how do we add value to it? And I just don't want that game.
Or a perfect example, we buy this building, the last 32 unit. The next morning after it closed at 7 a.m., a tenant, the owners gave the tenant my wife's phone number, and the lady's calling her 6 times at 7 a.m. We have property manager in house. And the lady had a leak in her room that had been leaking for 3 months, but the old owners didn't want to do anything with it. So they're like, just wait until they buy the building. And this lady's like, so my wife's like, so pissed because they literally went and put notices at everybody's door, like, here's the number to call, and it's not her cell phone number.
Oh gosh.
So that's a good thought.
Yeah, man. Not of my deals. Hell no. Because I fear for that happening in my life. But
So you, to me, have come off very as a minimalist, right? I think you wear the same clothes every single day, right? You wear the same shirt, black shirt, black pants.
Now that my relationship is, progressing with my girlfriend, she's getting me into other outfits. She's like become my stylist, and she loves it. Nice. So I'm wearing a little bit more, but definitely on work days, I'm always the same: black tee, black pants, Lululemon, the whole thing.
Yeah. I think we both share the same love for Lulu. Except sometimes I get disappointed. Sometimes I get get holes in the boxers and stuff, and I'm like, my JCPenney boxers that I had when I was a kid, those things, I had those things for like 10 years, and Lulu, I get a hole in them for friggin' 5 months, and I'm like, what is it, Lulu? Come on,
dude. Yeah, I mean, it's rare, but then they replace it for free, so who cares? I think that Lululemon should brand themselves as the clothing for entrepreneurs, because you and I are not alone in that. All our entrepreneur friends love Lulu.
Exactly. So you were kind of a minimalist, kind of flying under the radar. You were looking or had done some commercial buildings up to that point. So when you sold your business, did you pay a bunch of taxes, or did you move that somewhere else?
Good question. So I was motivated to not pay a bunch of tax because I was concerned that I was going to have a huge bill. So what I did is I organized the structure. The deal closed on October 31st, but I delayed most of my income to come in January from the sale so that I had time in 2021 to deploy that capital in ways which could be tax advantaged, because I'd heard I'd heard whispers that there were ways to offset taxes, but I didn't know any of that myself. I'd never done any of that. All my income, I just paid normal taxes like a normal person. But then I joined GoAbundance. I joined the real estate mastermind that you and I became friends in, because I'd heard that people have different strategies to do that. So throughout 2021, in my buying these buildings, I've offset that income from my exit. Yeah, so I don't have to worry about it.
Awesome, nice. Yeah, I think that's what what's his face, really tall guy that was doing a ton of commercial, Matt Anifrio. Yeah, he's doing that. Like, guys would be like, hey, I just need a building because I don't even care if I pay retail. I just need to save some money on taxes.
Yeah. I mean, and so many guys, whether they're doctors or they're high income entrepreneurs, a lot of them, they don't have, especially from my background, a lot of internet entrepreneurs, they have like no offset for their income. It's like they say, oh yeah, I have a $500,000 tax bill. I'm like, okay, well, let's get you a building. And your down payment effectively becomes like $200,000, and you can make $250,000 a year on that investment, after you consider the tax benefits, and you can do it over the next decade. You can pull that much cash out.
Yep. Yeah. It's so just paying half your money to the government just doesn't make sense to me.
No, but well, especially when you learn there is a better way. I mean, where I come from, it had never been talked about. Like, no one in my family knows any of this. I mean, they weren't high income people anyway, but there was just assumed you make money, you pay part to the government. But there is a way for the wealthy and for the people that are critical thinkers to opt legally to opt out of that system and say, no, I want more of my money working for me as opposed to working for the government's latest program.
You're just delaying the tax bill essentially, but then defer, die, and then you don't pay the taxes. Your kids don't pay the taxes.
Exactly. That's the game.
So All right. So then you were under the radar, kind of keeping it quiet. We had talked. We were going to get you we got some lists and trying to figure some stuff out. It seems like you've pivoted a little bit since then. What was that conversation like with Mike that got you to kind of open up a little bit more?
Yeah, it's so interesting because when I started buying deals for myself this year in 2021, I had no intentions of making a business out of it. I had no intentions of helping other people. I was like, I just want to get this passive income game figured out for me. The tax, the legal tax benefits for me. And then what started happening is people started asking me about, hey, can I, do a deal with you? Can you get me something that makes 40+% per year or more? Can you help me offset my $500,000 in taxes? And so I didn't want there to be this public brand around me doing that. I thought that my public brand is going to be me as an actor, as a comedian, which is this part of me that I love. I mean, all the money that I make from real estate and from my current businesses and from my previous business ultimately will go towards making movies in the future. So that's where I was thinking, I want my public persona to be the X.
Don't you have to be funny to be a comedian?
Yeah. I don't know. I mean, there's some debate around that. Oh,
yeah.
You asshole. All right, can I cuss on your show? I don't know. But yeah, that was the kind of inner conflict I was in at that time. But then I realized once these buildings started working and that I could help people and get paid as part of that process. I buy buildings, I sell some buildings to other people. Then it was like, if I'm going to have this business, I need to go all in. I need to be 100% committed. And so that's when I shifted my online brand to where now I want to show people how they can get the best of everything when it comes to investments. I want it to be 40+% per year, totally secure, 100% passive. And then I was like, I just got really excited. So then as a marketer at heart, I want to start marketing publicly.
Totally. Now, I do like to ask hard questions. And so, we'll dive into the nuts and bolts. But the thought comes to my head is you say you get 40% returns, but you're only 1 year in, right? So
yeah.
So and that's the one thought that I've always had with my own self and selling courses and programs. It's like, I haven't been through a cycle. I haven't been through a shitty time in the market. Like, who am I to say? Like, I want to listen to, the Ken McElroys of the world that have gone through 3-4 cycles, right? And so that's was always my hard thing that I struggle with. So what's your thoughts on that?
Yeah, well, I think there's several things in play that have you predict as an investor what your returns are going to be. And one of the things that are my hedges against volatility within the market is I buy in industries commercially that are set to do very well. The economy goes up, down, or sideways. So as an example, medical buildings. Like I invest in the medical industry is one of my biggest parts of my portfolio. Because let's face it, if the economy goes down, people are still going to urgent cares. They're still going to hospitals. Like they still are going to they want to get better and survive. Okay. Yeah. It's not something like office space where people may go into an office in the future. They may not. We don't really know. They may go into a mall to buy things, or they may not. They may just order everything online. So depending on what industry you invest in, you can have relative beliefs about the security of your style of investment. And so the way that I do this is I buy buildings, I buy them in bulk using the capital that I've acquired, and then also some loans from other people that want to invest capital with me. I buy groups of properties and therefore get a discount from each of them on each of the properties by doing that, because the owner's happy to give me a discount if I'm buying more. And then when I sell individual properties to investors, I'm able to work out alternative financing with them so they can put down less than the full 20%. And so when they do that, that multiplies their returns.
Yep. Okay. Awesome. So let's dive into the what you're doing. So you're buying medical. And so just for reference, my dad's a physician. He started his own practice. He had an urgent care, and then he started a family practice, and he had planted like 3 urgent cares, one in Tri-Cities, one in Boise, one in Wyoming. And then my mom, and he was flying back around to all of them. And my mom said, hey, I'm not going to raise the kids by myself. So he sold 2 of them, the one in Boise and one in Wyoming. And the urgent care printed fucking money, just printed money.
I love urgent cares. Yeah. Yes.
And then my dad's always been a pioneer. He's 15 years ahead of his time. He's always way too early. But he had the urgent care. And then he put a family practice side on that started just eating the cash from the other side. Ended up getting a bad business manager, stealing money from him, didn't make his mortgage payment, got foreclosed on his building, ended up getting bought out of his clinic when going through the divorce. So, but then it's funny because he was the first one in the area to have the urgent care, and he had 2 of them in Tri-Cities. And now all of a sudden we have a regional hospital. It's a Providence chain. If it's a West Coast chain, but they have the Cadillac, and there's urgent cares effing everywhere. And they were buying the other urgent cares, and it's like, man, if he could have just held on and just kept going, or just had a proper person to run, he was the visionary. He's the, have somebody run it. So I understand that space. So I think.
So when did he have his first urgent care? Was this like early 2000s or
80s? No, back in the 80s.
80s.
Like early 80s.
Wow.
My dad's 73. He graduated from medical school, I think, in early 70s. And then he was like late 70s, early 80s, somewhere in there.
Yeah, dude. In the 2000s is when urgent care started to get popularized, and then the 2010s they've just caught fire, and now you see them everywhere.
It's great. Yeah, I mean,
they are the most popular way to people access medical care.
Printed money, and then just printed. Like he had years, he made millions. And but the other thing about my dad that's cool is along the way he also flipped a 500 unit apartment building, and he brags $500 out of my own pocket. That's all it took me, and he spun the deal. He had land. If my dad would have just been a doctor, I'd be a trust fund baby. If he would have just done real estate, I'd been a trust fund baby. If he would have just done his internet stuff, I'd be a trust fund baby. I mean, he has an online web store that he sells supplements on he's had it since 98.
Wow.
And he's
dude, you're cut from the cloth, man. You're cut from the.
See, and I'm adopted, so it's all learned behavior. So
it's amazing.
Yeah, I got his ADD through osmosis.
Dude, do you hope for your kids that they're entrepreneurs too? What do you think about that?
I just want them to be happy, honestly. And I think I have a firm belief that you'll be happier. One of my goals as a kid was it wasn't ever an income goal, really. It was, I want to wake up one day, look at my wife and say, hey, I want to go to Hawaii tomorrow, and be able to afford it. And we did that in 2018. Monty was 6 weeks old. It started snowing, and I'm like, fuck this, let's go to Arizona. Looked at her on a Tuesday, booked the flights. We were gone on Thursday, and I'm like, that's it. That was the goal. That was the dream.
Hell yeah.
So I just want to be happy. So
yeah, man.
Like we all do. I'm still trying to chase that elusive balance and happiness, and
the non-existent balance.
That's the hard part about being in my brain, I think sometimes, is you're always go and looking for more and different things. It's like, then you see the people that are just steady eddies that just can, just go do their job, go home. It's simple. It seems simple.
Well, that is interesting, because I bet at home, I mean, your wife would probably be, this is my hallucination, my guess, she'd probably be very happy with like a very simple life where she can just operate a great business and just keep making that little business or that whatever size business just better. Just that one thing. She'd be happy with that.
She just told me last night, she said there was a point 18 months ago or something, we had enough money to pay off all our single family and duplex rentals, and we probably would have cash flowed, I don't know, like $7,000 to $10,000 a month, something like that. And she's like, I was ready to be done at that point. I could live a perfectly good life with $7,000 to $10,000. And I'm like, that's the hard part, is I don't want to. I want to pay for GoAbundance. I want to go to the, all the trips. I want to go I want a personal trainer. I want, all these things. And she's like, no, she does not want those things. And so it's difficult.
Yeah. No, dude, being growth oriented and just like, for me, I've learned about myself, I'll never be satisfied. I mean, I'm worth $100 million. I'm still going to chase $200 million. When it's like, that's just my nature. That's the happy part, is the growth part, is the acknowledgement that, hey, I'm moving forward somewhere faster.
Yeah.
More so than any one particular goal. It's just
exactly. And I think the difference is not that she's not growth oriented.
Well, yeah, I didn't mean it like that, but just
no,
like
I hear
financially even.
Yeah. And so like, I just look more like, she looks more at like quality time, going on trips, spending time taking the Monty to the farmer's market and spending time, those kind of things that she really wants to pour in. And I get bored easily.
Yep. No, dude, I don't see a life for myself or for you where you're just happy going to farmers markets and like doing shit like that. You got to build something, you're like, that's just the way you are.
I got to have something get me excited, right? And that's really, I think that's what it is. There's something that gets you really excited, and like high highs and low lows and stress. And I love chaos, love being in the middle of chaos, right? And
yes,
oh shit, is this going to close? Oh my God. Like, yeah.
But dude, what a blessing that you have your wife, and I've never met her, but what a blessing to have someone like you, to have someone like her, because you said that someone said like, how is it that you two opposites are together? That's why you're together, is because of that.
Yeah, I know, but it's a struggle and a challenge. But like, I wouldn't be here without her,
Oh
and
yeah.
she wouldn't be here without me because I'm the one that's driving, and she's the one that's making sure that the wheels don't fall off, right? And it's like we need each other. Like neither one of us is more important than the other in this equation. Like it's just I'm the front facing one, and she's the behind the scenes one. But like literally, I wouldn't be here. I'd still be working a job probably, or like I'd be starting 10 businesses, and they would all start off really good, and then they'd all fall apart.
Yep. Yep. Totally, dude.
Anyway, all right. So so you're buying, let's dive into the medical stuff. So,
Yeah,
or
sure.
just the buildings you're buying. So
Yeah.
well, first off, which build you bought a couple buildings last year. What were the first ones you bought with your money to offset when you sold your business?
Yeah, so there's a couple different asset classes in commercial that I really believe in, and so just sharing each of them. Medical is one, but then probably just as good as industrial. So industrial are things like shipping facilities, manufacturing plants, or buildings or areas, or logistics, warehousing. Like these sorts of businesses are also very economically, you could say, resistant, like
They're
economic
very hot
volatility.
right now. But I have a question on that.
Sure, yeah.
'Cause I dive in and research a ton of stuff. So, I've been watching a ton of videos about the shipping issues, right? There's issues,
Yeah. Supply
right?
chain.
Supply chain issues are backed up. And so you hear like over on the East Coast, like they're saying their warehouses are full and they're having to go buy more warehouses. Like the cap rates are compressing on warehouse space. People are building them. You can't get enough of it. Flex space is another thing that's really, I think, is really good. But let's just say warehouses and that stuff. But if they're not getting the stuff off the ships and they're saying that their warehouses are already full, is there really a supply chain? Is there really a shortage of goods and stuff? Or is it just they can't get from the warehouse to the stores? Because in my mind, it's counterintuitive. If they're saying everything's stuck on the ships, well, then why do you need more warehouse space? Because you're not storing anything.
Well, they're still getting that
Yeah,
stuff off the ships. It's just more expensive now than it used to be. They're just
but
paying significantly more to get those things shipped in.
Yeah, totally. And I get that, but still, if they're saying that it's a shortage in the stores because things are there's a inflationary period, things are short, like short supply, like appliances, all this stuff, they can't get them in, right? So if they can't get them in, they should be selling really quickly. So if they should go
not necessarily because
warehouse to store, right?
Well, if they're getting them in and there's a shortage, they'll probably never run out of any particular item. Price will just be elastic and change with the amount that they have in. So that's why you see the prices of individual goods rise as there's a shortage, because, eventually, theoretically, you could pay $1 million for a bottle of water because there's a shortage to where people are willing to pay that amount for it. But There's never just going to totally run out of individual products unless a company, there's no one at the wheel that's saying, oh, we should raise our prices because we're running out of product.
Yeah, which I understand. But what I'm saying is, if there's people are willing to pay more because there's less things in the system, right? Why do we need more warehouse space? Why are they saying warehouse spaces are like that?
It's because when you think about it, more people are buying things online than they did in retail in the past. They need more things shipped than they used to 10 years ago or 20 years ago. And so that's why, like, as an example, if you can get your hands on an Amazon building, an Amazon distribution center for a decent price, everybody's throwing money at those. The stuff that is like the most expensive that everybody wants is a Starbucks and an Amazon facility. If you can get one of those, you basically just completely forget about it for decades. Yeah. Because those things just make so much money.
Yeah. Okay. That makes sense. So there's a shift from storing more stuff in the Walmarts, the Home Depots, or whatever, right? For instance, which is a big warehouses that you buy stuff from.
Yeah.
Right?
Yeah.
Essentially.
Yeah.
So there's less of those, or they're not growing very much. So then they have to store it in more. Okay. That makes sense to me.
Yeah, e-commerce, you got to think about e-commerce. Where was e-commerce a decade ago? Not even close to where it is today. And where does e-commerce run through? It runs through industrial facilities, just as one example.
Yeah,
so
totally. Okay, I've been asking that question in my head for a couple weeks, and so that makes sense.
Yeah. So medical, industrial is great, and then some essential retail is still a good buy. I think that if you buy strip centers in really good markets, as an example, like let's say that you bought in downtown Austin or a suburb of Austin. Okay, because you're in Austin, you're going to win. People are going to be here. They're still going to shop outside. You're going to be okay. Yep. Now, if you bought in a rural area, good luck. Yeah. Nothing I do is in rural areas as a result, because I always want to hedge against what if my tenants leave? What if the residents leave? Okay.
Yeah.
People don't leave these major cities. They move to major cities. And so that's part of my hedge. But things like grocery store anchored complexes, I love. Pharmacies are great. These are places where people will still use. And even if they don't go in person, which a lot of people don't, they use Instacart, they still need to have things delivered via Instacart from those local grocery stores.
Yeah.
So these are things that I personally love and invest in.
Okay. So which one are you really kind of diving into and really getting your hands on? More the
medical.
stuff?
It's interesting. I spoke at a real estate conference in Miami just this last weekend, and one of the other speakers there was Kevin O'Leary. Now, if you don't know Kevin O'Leary, he's called Mr. Wonderful from Shark Tank. He's a multi-billionaire, big-time investor, and loves commercial real estate, by the way. In fact, his total portfolio is about 33% real estate, and of 25% of his total portfolio is commercial real estate, and 33% is real estate. So a significant portion, 2/3 roughly, is commercial real estate. So I asked him, what are the industries that he invests in? And when I said that I invest in medical, and I mentioned the returns that I get in the passivity and so on, first of all, he's like, whoa, those returns are pretty good, which was very affirming for a billionaire shark to say that. But he loved medical right out of his mouth. He's like, I love medical right now because independent of what happens with retail and office, this is an industry that's here to stay. And so for me, recently, what I've really dove into and what a lot of my new investments are is probably about 60% medical for me, about 20% or 25% industrial, about 15% retail.
Okay.
For me right now. And it's not probably forever going to be that, but that's where I feel safest with my money right now. And an example of that is an urgent care. And by the way, it's crazy that your dad was doing urgent care so long ago. A lot of guys I talk to are like, yeah, urgent cares weren't around 10 years ago. I'm like, yeah, they were.
Yeah.
Yeah, they were. It's just consumer preferences hadn't adequately shifted in every major market to where urgent cares are the biggest moneymakers.
Yeah.
But the urgent cares like I invest in now, I mean, these businesses, they're making 60% margins on their money. I mean, it's just incredible. I'm like, maybe I just buy the actual businesses. I'm buying the properties with them as tenants. But anyway, it's just been great. So, yeah, I mean, as an example, did you want me to just give an example deal?
Yeah, let's go. Let's dive into a deal.
Is that good? Okay. Yeah. So an example deal would be I buy an urgent care in the Chicagoland area. This is one that I have right now. So it's in a suburb of Chicago. I buy this urgent care. I get in for around 10% of my own money on maybe a $6 million deal or something. I arrange alternative financing, or I just get a discount, which leads me to be able to take out that 10% on buying a bunch of them at one time. But anyway, it effectively, once you consider everything, I'm able to get in for about 10% down, finance the rest. And then on that money, here's a little bit about the lease. This is really cool. So in this lease, I've got a 20-year lease. In commercial, that's about as good as it gets. You get like in
now, is that a brand new lease that you're
brand
buying?
New lease. Brand new lease. So it basically functions like a sale leaseback, yeah, with the tenant inside.
So the owner operator is selling you the building.
Exactly. Yeah.
Got you. All right.
Yeah. So specifically this company, what they do is they build locations all around the country. Okay. And then once they build it, they partner with a local construction company. But once it's built, they sell the building and the lease for 20 years to investors. So it's basically like a passive, secure, stabilized income source for new investors that want to jump into it. So it's a 20-year lease. It's absolute triple net, which I know you know what triple net means, but in case someone listening to this is not familiar with the term, triple net just means that the tenant covers their own property taxes. So property taxes go up or down, tenant's responsibility. They cover their own property insurance, and they cover their own maintenance. Okay, so toilet breaks, a light fixture breaks, whatever. Anything happens with the building, they are the responsibility. But separate from regular triple net, which is what most of my investments are, occasionally I'll get an absolute triple net deal, which means that the tenant also covers their own roof if there's a roof replacement that needs to happen, if the parking lot needs to be repaved. So there's literally no expenses that ever track back to the landlord. So it's 100% passive. So that's one part of the lease. And then there's 2% rent increases built in every single year. So it's like you get appreciation every year and higher income every year from those rent increases.
I always wonder, why would somebody do an absolute triple net though? Why wouldn't they? Is it just because they don't have the financial means to buy the building themselves? Like at that point, you might as well just own the building.
Well, it's a good question. On this particular business, what they're banking on is that if they take the capital from selling these buildings and the leases, they can build out more urgent cares faster. And so while it will be overall more profitable in the short term for them to own the buildings, their mindset is let's get as much market share as we can, get into as many really good markets as we can. We'll fundraise capital little by little as we go. And then later, we can buy back.
That totally makes sense because basically that's the same thing we're running up against right now as we're buying these multifamily deals is we only have so much money to put into these deals ourselves, right? Right. And so if you were to, sell them per se or whatever, and then lease them back, and then you could set whatever to say hypothetically, then you can get your capital back and then go do another one and then another one and then another one and another one with a fixed expense on that, knowing what it makes sense.
Exactly. I mean, if you I love to look at what big companies historically have done to gain big market share. Like, how did Amazon become the 800-pound gorilla in the e-commerce space? Well, one of the major things that they did, and it's actually within their values, is they always think long term. If you talk to Jeff Bezos, you hear from him in interviews, he always thought long term with his business. And so as part of that, for many, many years, Amazon didn't take a profit for like decades. Yeah. They didn't take a profit, or they'd take a tiny profit out of a huge amount of money, because instead what they did is they used more of the money that otherwise would have been profit to build out more distribution centers, to expand their footprint, to make it where they could get faster and faster delivery, where they could offer more and more products to their customers so that people consider it everything.
Like their web hosting services.
Exactly. So they could expand to new verticals so that eventually they would take a profit, but they kept kicking that can down the road. And so I think and this is the same approach that I have with my buildings that I buy. It's like, I don't actually always optimize for high cash flow. I want to optimize for the highest overall return that I can refi or sell out of the property in a few years. And sure, if I want to take more cash out, I can get my 28 to 30% cash on cash my first year, my second year. I can do that. I can get high cash, but I'd rather keep more of the money in the property and then sell later on for a bigger payday. That's how I get my 40. That's another element of how I get my 40
because you're just putting less cash in the deal, essentially.
What's that?
You're putting less cash.
Putting less cash in the deal, and I'm taking less cash out as I go along. I'm leaving more cash inside the property.
Yeah. Yep. Yeah. So then you can, compress those, but your returns look really a lot healthier.
Exactly.
As a percentage basis, right?
As a percentage, yeah. And like I said, if I want to refi out, I can still get my 28%, cash on cash. But it's like, for me, I've got cash flow coming from other places, from my exit or from other investments that I have, or some of my real estate, obviously gives me good cash flow. But most of my bigger plays are optimizing for overall net worth growth that I can then turn into a bigger cash payout later on.
Gotcha. So you found this company that is building urgent cares.
Yeah, and I just bought a bunch right at once. Yeah.
And you're like, hey, you're building 7 of these. I'll buy all 7.
Yep.
For X price. It saves you all this money on realtors, on marketing, on holding, on all this stuff. I'll just close them all when they're built and the guys would go. So you're buying them at, say, a 5 to 10% haircut. Mm-hmm. Then you're taking that 5 to 10% haircut maybe as a carryback or something, or you're getting less money in the deal.
Yeah.
And then are they carrying? Are they holding any of the money back?
Who
are they? The sellers, are they doing any seller carrybacks?
Yep. And I worked that out with them as part of the deal as well, so that also helps me on my returns. Yep.
So let's dive into some numbers. I just love to hear numbers.
Sure.
So $6 million buy. So $6 million buy, you probably, let's say 20%. You're what, $1 million. 250 million 5, let's say, is where you should. Normal, if you're going to go to a commercial broker, you're buying one building, you're putting 20% down, you got to put $1.5 million into that deal.
Yep.
And your NOI on that would be what?
It's going to be about just over 300 grand, so about 330 grand per year.
Okay, so NOI, for people that are listening, NOI is your operating income that comes in the business, or your net operating income before you pay your bank debt. Mm-hmm. So that's right. That would be if you own this all cash, and that's how you find your values with cap rates. If like a cap rate basically says if you were to buy this all cash, then you would get a 5 cap, you would get a 5% return on your deal if you bought it all cash.
Your first year, that's right. Yeah.
So all right, so cap rate 5% cash. If it's a 5 cap, you're basically at that point getting in the first year a 5% return on your money. NOI is how you determine that.
Yep, that's right. That's right.
So, cool. All right. So you instead are going through and buying. So now work us through that deal, that $6 million deal. typical how you're structuring it?
Yeah, so I'll negotiate with the seller. I'll say, hey, can you hold maybe 10% of this total purchase price, and then I'll pay you out of the gains from the property over the next, 5, 6 years. 3 to 6 years is where it ends up landing. And again, if I'm buying in bulk and I'm showing enough cash on my balance sheet and I have, repayment sources, which I do from a variety of sources, then they'll take that deal. They'll carry some of that for me. And then I'm able to get in on a $6 million deal. Maybe I'm getting in for 650 or 700,000 instead. And I just do that over and over and over again. And that's part of what boosts my returns significantly in the short term. And specifically, it allows me to get into more properties. That's the biggest thing. It allows me to spread my money across 4 properties, 5 properties instead of maybe 2 that I could have done if I did the full amount, the full 20% down that's needed for the bank to finance it.
Yeah. So, okay. So then, but where are you coming up with the 600,000-700,000? Is that just your capital?
That's my capital. Yeah.
Okay.
And by the way, my exit for $4 million, that's not all my capital. I mean, I had capital. I was making a couple million a year with high margins, so I was keeping money as I was going through the years.
Yep. So then say capital, your personal capital eventually runs out.
Yeah, for sure.
And just the nature of the game, you could be anybody unless you're Jeff Bezos, but your capital is going to run out, right?
Yes.
So what's your plan? Are you going to be selling buildings and then just continue trading up or trading into more buildings? Or
exactly. I let the returns grow and then I 1031 into a bigger building once I sell these. And along the way, I get paid to help other investors get into these deals.
Okay.
And to the very specific kind of finance deals, the very specific kind of structures with the high returns. And, I get paid for that service. So that's part of my active income that I use to then get more buildings myself on top of my existing capital.
So, okay. So you got the same package as 7, each building $6 million.
Yep.
What you're saying is you might buy yourself 3 of those.
Yeah.
And put other investors in 4 of them. And you take that 10% haircut that off of what you took from the buying them in bulk. And then you're not giving the seller or the new buyer that haircut, but you might allow that 10% to stay in the deal. So they're only bringing 10%.
So that I have equity in the deal so I get a payout later. Or they'll also pay me a little bit in the short term too. Maybe they'll pay me 30, 40, 50,000 that comes to me at close. And so that's also my motivation to do it for other investors to boost my liquidity.
Now, are you staying in the deal 50-50 or how are you structuring that if you're carrying back?
It depends. It depends on the deal. It depends on the carry that I have on that individual thing. It depends on the investor's needs, and it could be a number of different options. Gotcha.
Okay. Yeah, super interesting. So how many of those deals have you done so far this year?
We've done 4 so far, and I'm under contract on 3 more to close in January. But I just submitted a bunch of offers on a bunch of new buildings that'll give me more inventory as well.
Gotcha. Nice. So
like now I'm submitting LOIs on properties. I mean, I'm probably submitting 5 or 6 a week. I'm trying to get more. But then again, you got to understand, like I'm submitting LOIs on off-market deals. Like not a lot of these guys, they're not always ready to sell. They haven't listed their properties. That's part of how you get a good deal is like you buy in bulk from sellers that have lots of different properties. And a lot of times I'm just throwing darts in the dark. I'm not going to get a deal, but every now and then you get a piece of gold.
Yeah, this is where you needed me and Jimmy and our team.
This is where I need you, bro.
I know.
Yes.
Because then you're not throwing shots in the dark. I have this kind of team, what we say to our team is, and my sales manager is, we have a list of, let's say, 500 properties that we really want to buy. Well, I really want to buy. And so I just want to go be friends with 100 of them. Just go be friends with 100 different of those people and just find a way to talk, get it in front of them. And if you come at it that way, like you're going to buy buildings. I think if you run that model and get in front of them and you start sending gifts to, here's an Easter basket, some fun Easter basket because you found out that they got grandkids and you send some fun gift for their grandkids or whatever. And just say, hey, just thinking about you. And you just stay front of mind and build a relationship with these people. You're going to buy buildings and you're going to probably buy them at probably a decent price at the end of the day. It's just the long game, right? Of how do I build those relationships and first, how do I get them to want to talk to me in the first place? And then after that, how well do I maintain the relationship?
Yep. So. That's so interesting. I mean, you in that regard have been one of the most interesting people that I've met because your ability to build relationships with people in interesting and innovative ways is, I mean, I hadn't seen it before. And so, yeah, I mean, I definitely feel I have a lot to learn from you in that part. And offline, I might be like, hey, can I give you some more money to help you?
I didn't get any of that money last time.
Oh, that's right. I paid your referral for help on that.
You paid Jimmy. Yeah, because I think At the end of the day, like you said, you made a comment a little bit ago, everything's going to e-commerce for the most part, but they still need urgent cares. They
They
still
always
need
will.
grocery stores, right? Yes, a lot of thing is going in the real estate is going digital. A lot of things, you got all these fancy sites, loop nets, and you got all these different ways. But at the end of the day, it's a relationship game, right? I'm not in the real estate business. I'm in the real estate marketing. I'm marketing for real relationships. And if people know, like, and trust me, and I build the correct relationship, I will buy properties.
Well, and that's the same way as when I started this business, the business of helping other people get into properties. I had to be very honest with myself. I'm like, do I have anything unique to add to this market that doesn't already exist? Because people are not going to buy deals for me because, how nice my hair is. Okay.
Yeah.
And it is nice. Like if you go on my
Yeah.
Instagram, you'll see it's great. I'll be very honest with you.
It's a little
But
long.
they're not going to pay me. They're not going to buy deals for me if that's what I have to offer. I have to bring something different. And in marketing, this, Elliot, better than anyone. It's like better isn't good enough, but different is. You have to do something that's totally different, bring something that's different, because that's what helps people say, oh, this is a person I want to do a business relationship with. And so for me, when I could combine everything that was important to me, 100% passivity, secure returns, like exponential returns over 40%, that's where I was like, okay, I can in good conscience offer something to the marketplace. And it took me a while to get to that place where I felt honestly secure in that. But now that I'm here, this is where the marketing engine for me is turned on because I'm excited to deliver this value.
Yeah. And it's funny because you do say you got to be different. And it's different almost right now is going back to what worked before 20 years ago, which was guerrilla marketing.
Right.
Getting in front of somebody. That's different today, right?
Yes.
Everybody's online. Everybody wants to be online and have these fancy websites and SEO and PPC and all that stuff. But you think a guy that's looking to sell his building is looking on Google and you looking at, I need to sell my 35 unit apartment building. Who are they calling? They're either calling a broker or a buddy that wants to buy it, right?
That's true.
And so getting in front of them, I literally, this deal that we should be tying up this week, we talked to the guy. My sales manager is really good at cold calling people and getting them on the phone and building that relationship. He's got one gear and it's really just talking to people and building good rapport. And then I talked to the guy and he's like, oh yeah, we were actually getting ready to list with the broker. And this was a, kind of a probate messy situation and getting ready to list with the broker. And I'm like, oh man. So we gave him an offer that day. And then I was in Seattle and I actually door knocked the lady the sister, that they didn't talk to each other, handed her 2 offers, and I had my son with me when I door knocked her, and it's like they're like, yeah, let's do it,
Nice.
So yeah, it's so that's the different now. Everybody doesn't want to do that. They want to just wait for people to come to them.
Yeah.
So.
Yeah, in a competitive marketplace, man, that's so good. It's a broker or a buddy if you want to get access to more deals. So if you get better building relationships, you'll have a better business.
If you have more buddies, you have more houses.
That's right.
Exactly. So I'm not a broker. So
that's one thing that's been useful is like one of the things, and I'm probably not as good as you, Elliot, and almost certainly not as good as you, but I love networking. I love like for free adding value to people that are in positions of influence in whatever way that might be, because like over time, even if I don't want anything from them, even if I cannot imagine ever wanting something from them, just continuing to add value into relationships means that I'll always have new opportunities that I can't anticipate right now.
Yeah,
and so
exactly.
I started doing that years ago, and now, like when I start sharing the returns of my deals, like with guys that are not in real estate, guys that are from the online marketing space, that I come from the coaching space, the e-commerce space, now I'm talking about deals. They're like, well, I've never done a deal with somebody else because I didn't understand real estate or wasn't comfortable with it, but I know you, but I'm friends with you, so. I'm comfortable doing a deal with you.
Yep.
Now, so yeah, you can never anticipate where your network can help you, but you can anticipate there will be a day where you need it.
Yeah. And this is where you need to implore like assistance though too, because I always say I want like guys I want to talk to, I want them to answer the phone when I call on the second or third ring, or just answer the phone in general, right? Or call me back. So how do I get people that are probably way more successful or really busy to want to answer my call, and so it's like you said, add massive value.
Now,
like I always did that along the way as guys that I wanted to mentor me or be like, I would literally just say, hey, I'll give you half this deal for free. Just teach me how to do it. Right.
Nice.
Yeah.
Nice.
So
yeah, man. And it's that approach, it's that attitude that will guarantee long-term success for you.
Yep.
Guarantee.
So, but awesome, dude. Well, I appreciate it. Where can people find out more about you? Looks like you're growing. Looks like you actually have a pretty decent Instagram.
Thanks, man. Yeah.
Yeah.
Yeah, I mean, I've built it up for years, in different businesses, but it's still there supporting me now. Yeah.
Yeah, dude. That's
I'm lucky.
I wonder how that transition is going to be for engagement with real estate, because it came from fitness, I'm guessing.
Yeah, well, fitness and then the online marketing space. I mean, dude, my engagement has gone through the floor. Like it's gotten way worse. I transitioned completely my brand to being an investor and marketing to investors. Like, but that's okay. Like I knew that and I was comfortable with that.
But shit, if you okay, so what, you have like 130,000 something followers, I think I saw.
It's like 180,000 right now. Yeah.
Okay, so who cares if you say your engagement drops to 5% of the people engage?
Yeah.
Who cares? You still have 9,000 people that are like, and you're selling big. You know what I mean?
Exactly. So that's why I wasn't worried about it ultimately. But
yeah, nice. Yeah, I was talking to this guy that works at our gym. His name was Ryan Stacks, and he had a big following for fitness industry. Had a huge TikTok or whatever. And I was like asking him like, hey, I was wondering if you could post some stuff, like go follow this guy, or like real estate my podcast. I just want to see if there's any crossover. And he wanted me to pay him money, and I'm like, nah, I'm not paying you any money. I'm not. My wife's gonna let me spend money on this to see if it works, because So yeah.
Well, dude, like pay someone with a much smaller following in real estate, because you'll get fewer people overall that follow, but it'll just be better people.
Yeah, I wouldn't. I am a big believer. I don't want to pay people to do stuff. I want my relationship. Like I don't want to buy followers, right? And so I was like, I just want to see if it would work. So it's almost against my like. It's the same as buying like something on market, like on the MLS. Like even if it's like a deal, like we were working and it got listed, and I'm like, oh, it's still a good price. I just refuse to pay it because I'm not gonna compete with anybody. I can get a better deal going direct to seller, and I refuse to pay an agent to buy that property.
Dude, I have a little bit different mindset. I love paying people. I love paying people. As long as I'm getting a good deal, I love having somebody else do that work for me. And it has to be a good deal. It has to meet my metrics, has to meet my standards. But if I get all of that, I'm like, hell yeah, I'll pay somebody else. Saves me the time.
Yeah, I just paid somebody $25,000 for the last deal that we bought, because he brought it to me. It was off market. He was working direct seller, but I still it wasn't like listed on the market where everybody can,
Right. I got you.
Yeah. So yeah, I love paying people. I love handing guys checks. The guy was
me too.
Yeah.
Yes.
So yeah, because it means I did something really good if I had to give somebody a big check.
Exactly. And they did something really good for you.
Exactly. So cool. So where can they find out more about you?
Yeah, people find me like if you're on Instagram, you prefer Instagram at Sterling. Just go to at Sterling is my first name. Or if you prefer Facebook, you go to my profile, Sterling Alexander Griffin. And then finally, if you want to get access to look at some of my deals, if this sounds interesting for you, you can go to my website, lifechangerproperties.com, lifechangerproperties.com, and just sign up for my deal flow list there.
Nice. Awesome, dude. Well, thanks for coming on the show today. I found it very interesting, and I love the new space, the commercial space. That's where I'm getting more excited, is on the NOI, on lease, stuff like this. And so that's kind of fun for me to be able to see what somebody is doing. So
thanks, brother. Appreciate you.
Yep. Have a good one.